Hey everyone, it's Lee Goldstein, Trading Director at 10 Minute Trades. I want to welcome you to podcast episode 27. And if you've been watching and keeping track of some of the podcasts, the idea here is to do a weekly wrap up. And this week I'm wrapping up May 22nd through the 27th. And I'm going to cover most of the important events and information that you need if you want to keep up with what's been going on in the trade room. So first and foremost, let's talk about the market opens. We're trading the gold open, which is an 8:20 event, the oil open, which is a 9 a.m. event. These are Eastern time, and then the NQ open, which takes place at 9:30. Our goal is to trade oil open every day, NQ open every day, and the gold open when it's appropriate. And I say when it's appropriate because if there's major news, say the U.S. jobs report, which happens to be coming out this coming Friday, um, June 3rd, for instance, I will probably not trade the gold open 10 minutes prior to the U.S. jobs report, which will move gold dramatically on the news. I think it makes much more sense if you're going to trade gold, trade it after that news event. So when I say we're trading gold selectively, those are some of the issues that will, affect the way that we're going to trade the gold open. So just a wrap up, rather than going through every single open that we went through this week, overall, the opens are working well. Um, if I don't take signals well, that's often when we have a stop out. We've gotten the rules organized so that if we're sitting right at a high or sitting right at a low, we know we shouldn't take those orders, those trades. And we know that oil, which is interesting, has at least a 50% reversal situation on most oil opens. So we're trying to decide, we may decide to take two oil trades on the open because sometimes that second move is better and is actually the main direction, even though our setup being good still gives us a profit on the first trade. So it's a very interesting thought that we may take two trades. Now, the NQ, we are concerned. Our trades are still working, but people in the room are saying how much trouble the NQ's been giving them. We definitely noticed that the NQ has changed, and I would say that we are going to shrink our targets and just be more scalp oriented on the NQ. So that's something to keep in mind. Well, one of our best trades of the week was the oil open, one of the oil opens this week. In fact, it was on the 25th. I think that was Wednesday. I traded oil instead of micro oil. I traded full-sized oil by accident. We accidentally made $300 instead of 30. So it was a great trade. And those are the kind of mistakes you want to make in the trade room. So the opens have been good, still absolutely worth making your way into the trade room if you want to learn how to do them. No matter what happens, my intention is if the opens get really challenged and become difficult to trade, then we will trade around the opens. You know, time, that's my goal. Trade around the opens. So still trading on appointment, we'll make specific times that we'll trade around, and I think, it's going to be interesting either way. We got up very early in the morning on Tuesday. We got up at 3 a.m. Eastern Time to trade the Euro French Flash Services and then the German Flash Services manufacturing PMI reports. On the French report, it was a challenged report. It stopped me out. I only lost $31. It hit my first target and I just scored. It didn't hit my first target. No, now that I'm thinking about it, it almost got to my first target. I hesitated on getting out because I really thought it would continue in the same direction, and it didn't. It reversed and stopped me out. So we went into the German trade um, down $31.25. The German trade was a nice winner. We wound up being positive. I think it was a $167 winner, and that was a profitable trade. So it was at 3:15 the French trade took place, 3:30 in the morning the German trade took place. My feeling is this, we haven't traded those reports in years live. I wasn't going to trade 10 contracts. My intention was to trade them small and show people that these reports are tradable to make a profit on. It's exactly what happened. It's exactly what we did, and we'll get up next month and do it again. Flash Manufacturing was on the 24th also. Excellent, excellent trade. New setup, nice new range trade for Flash Manufacturing. New home sales was after Flash Manufacturing. And new home sales, we're testing the trap trade setup, and it's looking good on all home sales reports. It was great on pending homes on Thursday. So we're definitely going to start going with trap trades, full size gold on home reports. Then we had the API report on Tuesday. What a crazy move. It exploded like 50 ticks in the wrong direction from what the news was. It was just bizarre. We got filled. I was using a special feature in the software to protect us on a reversal, and somehow I lost $40 on a trade that I thought I was going to make hundreds because of the move, and because it was such poor liquidity, it never filled or never hit my targets. I had a 25 tick target that never got hit, price reversed, and I had moved my stop to break even plus 4, and somehow I lost $40 on that trade. It was crazy. Nobody made money on it because no one got filled. It moved so fast. It was really wild. But again, what we're noticing is that API oil report on Tuesday afternoons, which by the way is Wednesday this coming week because of Memorial Day holiday, it was explosive and it's starting to move very nicely. Then we came into the room on Wednesday for durable goods. So durable goods was up on Wednesday, and it makes me think about the bond report on Thursday because I made a decision for both of those reports. The durable goods report had not been trading in a consistent way, meaning it traded with other news prior to this week. The last month it traded with Thursday jobless claims. We didn't have a consistent way to trade it, but I have a few different setups for durable goods. I felt there was too much risk, just as I felt that the bond report would also not work very well on Thursday because of rollover on the bonds, which creates liquidity problems possibly. And also our gold alternative setup on bonds wasn't working well. And of course, both trades were awesome and both trades were perfectly fine using the breakout on the DMM for durable goods, and the bond report would have worked with our normal setup as well. Plus our gold alternative setup was great. So going forward, I'm just going to trade those darn bond reports until they get better. At a minimum, one contract, and at a maximum, we'll go higher. I'm just tired of being unable to make a great decision with the bond reports. We know they're not trading great. You all can watch. I'll trade them until we start making money on them, and then you can join in. Now, FOMC meeting minutes, I really thought it was going to be the trade of the week, and it was it was a bust. It was a very minimal impact. Our original trade just didn't really do much of anything. We lost a couple of bucks on it, and it just, I think $40. There was never a really great secondary move, so it just didn't work that well. Crude oil inventories, another excellent trade. Natural gas, we had a profitable $290 trade. And then pending home sales, as I was saying before, excellent trap trade, looking really good going forward to do the home sales, new homes, existing homes, and pending homes as trap trade. I have a good setup for those. And then the 7-year note auction, like I was saying, I think ultimately the 7-year note auction is probably the better behaving of all the auctions right now. So I'm not going to watch those auctions. I'm going to trade them as poorly as they're behaving in general because I want to catch the good ones because it's $31.25 a tick on the good ones. So we're going to stay with them, hang in there, and then, just keep trading. Like I say at the opens, just trade them. Just trade them. Don't let, it's like when you're facing a natural gas trade. Natural gas can be very volatile. It can be scary to trade, but I just traded it and it made me quite a bit of nice profit with one contract. So, when you're really worried, sometimes that's the time you want to just trade it. So it was a very interesting week. Next week, we've got the U.S. jobs report, Beige Book, plenty of exciting, all the ISM, manufacturing and services, EDP, family money trades, big week next week. So make sure you get into the trade room. Don't forget the opens as well. I'm Lee Goldstein. This is episode 27 on the podcast, and I'll see you next week in the trade room.